Welcome to the deep dive. We're here to cut through all that dense data, those complex reports, and really pull out the surprising facts and maybe some useful insights for you.
Hmm.
Today, we're jumping into Indegene Ltd. They're a really interesting company, kind of sitting right where healthcare and technology meet.
Yeah, absolutely. And our mission really is to unpack their latest numbers, the Q1 results for their fiscal year 26, which actually just dropped on July 31st, 2025. We've looked at their analyst presentation, the press release, the board meeting stuff.
All the key documents.
Exactly. To see what it all means for the company, obviously, but also for the industry and, well, what you might learn from how they operate.
So why should you care about Indegene? Well, think of it like this. It's a chance to see how a company really thrives, not just survives, in a pretty specialized, high-stakes field that's changing super fast. It's almost like getting a peek at their playbook for innovation for market strategy in this digital era. Okay, let's get into it.
Right. So to really get into Gene, you have to understand what they are. They operate right where healthcare and high-tech overlap. They call themselves a digital-first life sciences commercialization company. And the key thing is how they blend really deep healthcare expertise with seriously cutting-edge technology capabilities.
Yeah, it's not just jargon. They really seem to walk the talk.
Mm.
On the healthcare side, you've got, what, 26 years of experience in the field?
Hmm.
They understand the complex regulations, the medical content side, and get this, over 23% of their employees actually come from healthcare backgrounds.
That's a huge commitment.
Yeah.
And it shows they have that deep industry knowledge baked right in.
Absolutely critical.
And then you layer on the tech side. They're really pushing a digital-first model, building their own tools, using advanced data and analytics. They even have a dedicated team, like over 600 people, just focused on tech innovation.
Wow.
So this mix lets them offer solutions across that whole life sciences commercialization chain.
Right. From the very start, like R&D, clinical trials, helping speed up finding patients or managing data better,
Hmm.
all the way through to sales and marketing, engaging doctors and patients across different channels. And they also cover those really crucial areas like medical affairs, regulatory stuff, even pharmacovigilance.
Which is basically monitoring drug safety after launch. Super important.
Exactly. Making sure the science is communicated well, keeping up with compliance. And it's not just small companies they work with. Their materials say the world's top 20 biopharma companies trust us.
That says a lot.
Mm.
Which leads us nicely into the market they're playing in. It's massive. They talk about a large addressable market. The figure they quote is over $135 billion.
$135 billion. That's enormous.
It really is. And that covers spending across things like marketing, sales, regulatory, R&D, even manufacturing and supply chain in life sciences. A huge field.
Okay, but how much of that $135 billion can a company like Indegene realistically target? And what's making that pie bigger?
Well, a big driver is outsourcing. We're seeing companies increasingly handing off operations. The growth rate there, the CAGR, is forecast between 9% and 14% from 2022 to 2026.
That's significant growth in just relying on partners.
Definitely. Plus, you've got this huge push for digital tools in life sciences.
Yeah.
Everything's accelerating, which, fits perfectly with Indegene's whole digital-first approach.
Right. It plays right into their strengths.
And if you look at the bigger picture, the industry itself is hitting some major turning points. Indegene seems positioned to really capitalize on these. You've got the patent cliff, tons of big drugs losing patent protection between fiscal 23 and 27.
Which means pharma companies are scrambling for new revenue streams, new commercialization strategies.
Exactly. Then there's intense margin pressure. Things like the IRA, the Inflation Reduction Act, are squeezing profits.
Yeah, I bet.
So companies are under pressure to make their P&Ls work harder.
And that pressure must put a huge focus on new drug launches,
Well,
right? They can't afford mistakes. They need launches to be super efficient, super strategic.
Precisely.
Yeah.
That's where a partner like Indegene, with their digital toolkit, becomes almost essential, helping navigate those launches efficiently.
Makes total sense then that their main focus is biopharma, what was it, 94.1% of their revenue?
Yeah, the vast majority, with smaller bits coming from medical devices and emerging biotech.
Okay, so massive market, strong industry trends, pushing things their way. How did they actually do in Q1? Let's look at the numbers.
All right, the financial snapshot. It shows pretty stable growth, actually, and a healthy business underneath. Revenue from operations for Q1 FY26 was INR 7,608 million.
Which is about 88.9 million US dollars.
Correct. About $88.9 million.
So is $88.9 million good? How does it stack up? The growth numbers tell more of the story, I suppose.
They do. Quarter-over-quarter growth was 1.8% in US dollars. Pretty steady. 0.7% in Indian rupees. But the year-over-year number is where it gets interesting.
Right.
12.5% growth in INR.
12.5%.
Yeah. Or 9.7% in US dollars. That kind of double-digit yearly growth really shows momentum.
Definitely gaining traction. What about profitability?
They maintained what they call a strong margin profile. EBITDA margin, that's a key measure of operational profit, held steady at 20.2% compared to the last quarter.
Okay, holding steady is good, consistent.
Right. And their PT margin, that's profit after tax, net earnings basically, it dipped just slightly quarter over quarter for the 0.3 points down to 15.3%. But, and this is important, it's up 2.3 percentage points compared to the same quarter last year.
So the longer-term trend in profitability is still pointing up. That's positive.
Very positive. And underlying all this is solid financial health. They reported a strong cash position, a healthy balance sheet. They've got INR 17,280 million in cash.
That's a pretty significant chunk of change. Gives them flexibility, a nice war chest for whatever's next.
Definitely. Okay, so let's maybe drill down a bit more into the business itself. Where did that revenue actually come from?
Yeah, the different segments.
Right. Their main engine is Enterprise Commercial Solutions, ECS. That brought in 58.5% of revenue, helping pharma market and sell. Then there's Enterprise Medical Solutions, EMS. The science and regulatory side, that was 28.0%. Brand activation was 10.0%. And that small slice, 3.5% from others.
Okay, and the core parts, ECS and EMS, how did they do?
They did well. Together, they grew 3.5% quarter on quarter and an impressive 16.8% year on year.
16.8%. There's that strong growth again. But brand activation, it saw a big drop, didn't it? Like 21.6% decline QQ?
It did, yeah. That definitely jumps out.
What happened there? Is that a worry? Does it show maybe a weakness in relying on specific projects?
It's a fair question. The explanation they gave points to two specific things. One was a project delay because a client hit regulatory hurdles with a product launch, and the other was simply a large project reaching its conclusion.
Ah, okay. So isolated incidents, not like a widespread problem.
Seems that way. More the nature of project-based work, sometimes having those ups and downs rather than a systemic issue.
Got it. That makes sense. What about their clients? How deep are those relationships?
Pretty deep, especially at the top end. They have 70 active clients, those spending over $250,000 with them in the last year, and 40 clients spending over $1 million.
And didn't you say a huge chunk of revenue comes from the biggest pharma companies?
Yeah, 62.7% of their revenue is from those top 20 global biopharma firms. That shows really strong embedded relationships.
That's significant.
And another good sign. They mentioned that growth from their top 5 accounts specifically is back on track. It had dipped last quarter, so they seem to have turned that around.
Good recovery there. And the team behind all this, how large is the workforce?
Total employees, 5,087. And remember that point about expertise. Almost 25%, 24.8% of their delivery staff have specific healthcare backgrounds.
Reinforces that blend again?
Their voluntary attrition, looking back over 12 months, was 16.8%.
Okay. And geographically, mostly North America and Europe?
Yep. North America dominates at 70.2%, and Europe brings in 27.1%, clearly focused on the big, established pharma markets.
Okay, so solid results, strong core business. But how do they keep this going? What's the strategy for future growth? What are they betting on?
They seem to have a two-pronged approach. One is going deeper with the existing large pharma clients getting more embedded. The other is broadening their reach, building what they call a wider, taller pyramid of clients.
Meaning going after more companies beyond just the absolute top tier.
Exactly. And that seems to be working. They've added 24 new active clients since their fiscal year 22.
Okay, expanding the base. And I remember reading about a specific initiative, Tectonic. What's that about?
Ah, yes, Tectonic. That sounds like a really key strategic push for them. It's focused on landing these large, kind of transformative change management deals. The idea is to move Indegene further upstream in the marketing process, getting involved in commercial content creation and strategy, not just execution.
So more strategic partnership, less just being a vendor.
Precisely. And it's showing early promise. They actually generated over $1 million in revenue just from Tectonic in Q1 across 2 clients.
$1 million already from a new strategy. That's tangible proof it's gaining traction. You know, it feels like so many companies want to move upstream. What makes Indegene's play here seem effective?
I think it ties back directly to those industry pressures we talked about, the patent cliff, the margin pressure. Pharma companies need strategic partners right now to help them fundamentally rethink things. Tectonic puts Indegene right in that conversation.
Makes sense. Are there other big initiatives for this year, FY26?
Yes, several others. They're doing a sales and go-to-market reorganization, basically reviewing who covers which accounts, setting up dedicated teams for the really big deals versus growth accounts. There's something called the Runway 11 initiative, links to that, likely focused on bringing in key new clients efficiently.
Okay, sharpening the sales
They're
focus.
also investing heavily in just boosting their capabilities, bringing in senior talent for data and analytics, for content within that ECS segment, and for the EMS side, bringing in senior leaders with medical and regulatory backgrounds, plus kind of repositioning their consulting arm to have a bigger impact.
So deepening the expertise across the board.
And internally, they're focused on operational excellence, adopting the Malcolm Baldrige model. It's a well-known framework for improving organizational performance.
Right.
And crucially, M&A mergers and acquisitions is still very much on the table. They've flagged specific areas like data and analytics, medical capabilities, and IT implementation as priorities. They even have a dedicated M&A team of about 10 people actively looking for deals.
They sound busy. So what's the view from the top? What did the CEO and CFO say about all this?
Well, the chairman and CEO, Manish Gupta, talked about as a strong start to the year. He emphasized that these strategic focus areas they've identified for FY26, they see those as the foundation, the bedrock, for their growth in the medium to long term.
Sounds like a clear vision.
And the CFO, Suhas Prabhu, backed that up. He talked about stable and profitable growth, highlighted the strong cash position again, and specifically mentioned that early revenue coming in from Tectonic.
Uh-huh.
He also reiterated the focus on M&A, so a consistent message from the leadership team about the strategy.
And just to cover the formalities, the board signed off on the numbers. Auditors were happy.
Yep. Board approved the unaudited results. They also approved a new employee stock option plan, an ESOP. And importantly, the auditors gave an unmodified opinion, basically a clean bill of health on the financials. Always good to see.
Definitely reassuring. And it's not just them saying they're doing well, right? They've gotten some outside recognition too.
They have. They highlighted recent accolades like leadership positions from industry analysts like Everest Group and ISG Group. These were for things like AI and analytics services and commercial operations in life sciences. Plus, they won an award Data Solution of the Year in healthcare for 2025. So yeah, external validation is definitely there.
Okay.
Absolutely.
So let's try and wrap this up. Summing up our deep dive today, Indegene put up a solid Q1. Seems driven by that unique mix they have, the deep healthcare knowledge combined with the tech savvy. They're tapping into a huge market that's got some real tailwinds from industry changes. And they've got a clear strategy, clear initiatives aimed at keeping that growth going long term. And some of those big bets, like Tectonic, are already starting to pay off, moving them into potentially more valuable roles with their clients.
It really is quite a playbook they're developing. Which makes you wonder, given how Indegene is using tech to transform life sciences commercialization, what could other specialized industries learn from them? About adapting to digital disruption, finding new value in old operations?
Yeah, and how might their way of engaging clients or even their focus on strategic M&A, could that apply outside of healthcare? It's something to think about how understanding these kinds of dynamics might help you spot innovation hotspots or analyze markets, whatever field you're interested in.